morning, I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy. And hey, that's me, Larry Steinhouse. Today is Friday, June 10th. Wow, the month's going fast. I want to welcome you all to the show. We are here live on WWDB Radio 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, YouTube, and other social media sites. I believe you can find me on all of them if you'd like. You can find me on Facebook, LinkedIn, Twitter, True Social, TikTok, and all those other social media sites by just searching Larry Steinhouse. Hey, just a reminder, if you're watching online, please hit that like button, please hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. And of course, you can comment live on the show on YouTube, Facebook, LinkedIn, and Twitter. And please say hi so I know you're watching. A couple of people saying hi already. Wow, I got a whole bunch of people saying hi. I love it. All right, we got James and Glenn and Peter and Linda. Thank you, Linda. And Brandon, it looks like. Oh, let's go, Brandon. Oh, I'm sure that's a different Brandon, of course. By the way, if you're commenting from a group and it's not the Money Chat Now page, your name may not show up on my dashboard, so please go to the Money Chat Now page and comment there so I can recognize you. Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class next Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. Look, if you weren't there last night, we taught people how to pay off their mortgage in 13 years without costing them any more money. So imagine you have a budget and you have a 30-year mortgage. We taught people how to do this in 13 years, pay off their mortgage in 13 years without using any more money. A couple other people have joined us online real quick. It looks like we got Tom and Charles and Larry. Thanks, guys, so much. I always appreciate you guys watching, and I always appreciate you guys saying hi. All right, on today's show, of course, we're going to be discussing the futures update. The flu is back. Wow. We're going to be talking about inflation habits and Starbucks closing a Union store. All right, let's talk about yesterday. It was another crappy day yesterday. Oh, boy. But remember what I said about the Dow and the top of the market range. The top for now will still be 33,000, and the bottom will probably be around 31,000. The move to the next lower bracket will be at the end of the next earnings season. Then I'm going to tell you to expect it to drop to below 30,000 with a top end range of 31,000. Look, today is the end of the dead zone, so I'm expecting a movement upwards today. It does also look like the Chinese stocks took a tumble yesterday when NIO missed on earnings. I told you to watch this stock yesterday before the end of the show. I said, watch this stock, and I said it would be the tell of the broader Chinese market. Along with the cruise stocks, casino stocks were also some of the worst performers in the S&P yesterday. Las Vegas Sands fell 4.5%, and Caesars fell 2.9%. And it's becoming a problem. It really is. It's becoming a problem. People are starting to get concerned. The investors are clearly feeling the recession is coming on and discretionary income may be disappearing. This will affect the travel and leisure industry shortly, and investors are bailing now to avoid the rush. The Dow, by the way, was up a little bit yesterday in the morning, and then whammo, man, the afternoon, it fell more than 600 points to close at 32,291. Look, we have the CPI data report today, and that's going to be that's currently what's on investors' minds. And I got to tell you, it's a double-edged sword. If the CPI is too high, what's basically going to happen is the market will fear that interest rates will rise 50 basis points. If the CPI is too low, well, then the market will fear a recession. So it's just bad news and bad news. It has to come in really low, but not too low, to make the market happy, sort of a sweet spot. Of course, we also had the initial jobs claim yesterday, and it rose to 229,000 last week, worse than the 219,000 expected. I don't really see that much of a big difference between the two, so I don't think that was much of a difference, but I think we're going to see that going pretty far up in the next couple of months. Apparently, investors in Meta did not like the new symbol change, and frankly, neither did I. The stock dropped 12.5 points and was back to the 185 level. I'm going to tell you right now, I like it at 175. If it goes down that low, that's a good play. 175 is a really good play. My prediction, it'll go back to 210 before earnings, so it's probably a really good play. This is probably an opportunity at this price. Even at the current price, it's fine at 185. I think it's an opportunity. Look, nothing I followed yesterday was in the green either. It was terrible. It was just a really bad day. All I can remember was Trump saying that if Joe Biden became president, the stock market would crash and gas prices would be $6 or $7 a gallon. Ugh. Oh yeah, and by the way, didn't Trump also say that China and Russia would be a problem? I wonder how much money those 2,000 mules got paid to destroy America. I was thinking about the last time gas prices rose to incredible numbers. It was when Hurricane Sandy came in and knocked out some refineries. You guys remember that? Way back when Hurricane Sandy came through. Well, guess what, boys and girls, and all you other 52 genders, we're heading for hurricane season again. That will be bad news for gas prices again. Ugh. So if there's a hurricane, we're in deep trouble. Moderna was also one of the biggest losers yesterday. This was also a stock that peaked during the scamdemic for obvious reasons. The stock was down 10% yesterday to a price of $134. Now remember that this stock had a high of almost 500 in the past 52 weeks, and before the scamdemic, the stock averaged about 25. So it has a long way to go down to get back to that range, and it'll probably be there this time next year. So I'm telling you now, Moderna will probably be in the 25 range, 35 range. I don't see people lining up for the useless vaccine anymore. In fact, hey, Governor Wolf got his useless vaccine and his 2 useless boosters and still got COVID. So there you go. As I said before, we're waiting for the key inflation report data today, and the report is going to be released any minute now, and we'll see how the market reacts. DocuSign yesterday also tanked when earnings report came in weak. They got a double downgrade yesterday, actually, too. The stock dropped 24% overnight and is now down to $66 a share. It is now at the top of the pre-scamdemic value. It'll probably go as low as 40 before it starts to range back up again. So watch that one. See, it'll probably range between 40 and 60. This was another stock that was as high as 300 due to the scamdemic. Unbelievable. All right, as I said, today should be the start of the market moving up again. And of course, the CPI numbers may delay this a couple of days, but the market will start moving up, so get ready. All right, let's take a look at the futures, and I'll bet by the end of the show, they're going to be very different numbers. So watch this, because by the end of the show, most likely the Fed will release the CPI data will be released, and the numbers will be very different. So let's take a look right now. We're down 39 in the Dow. The S&P is about neutral, and the Nasdaq is up 39. So it's going to be interesting. Keep watching, and keep watching. All right, a couple of people saying hi online that I haven't said hello yet to. We've got Ken and Lou and Joe and James and my brother Seth. He says I'm on his car on Facebook. So be careful. Don't look at me. Just listen, because I'm not going to change, and I want to make sure you don't get into an accident. All right, the flu is back. Well, golly, guess what, folks? The normal cold, the flu, and other everyday respiratory illnesses are back. Yay! Welcome back, Senior Flu. It appears that in the last 2.5 years, the flu and other respiratory illnesses all disappeared. It was a mystery. Of course, the fact that that if you were diagnosed with COVID, the doctor would get more money, paid more. That couldn't have anything to do with it, right? Of course, doctors and hospitals aren't greedy or crooks, so the COVID testing and reporting that got them extra money couldn't have possibly been the reason that anyone who sneezed or coughed was diagnosed with COVID. Of course, the CARES Act, by the way, if you ever read the CARES Act, you'll find it fascinating. The CARES Act, which paid hospitals and doctors instantly instead of waiting 3 months to get paid by Medicare and Medicaid, might actually make you think that the hospitals might skew the data because they get paid faster, right? And they also get paid more. But like I said, that couldn't be the reason that, like the flu and other respiratory illnesses went away. It had to be the fact that the people had stopped wearing masks. Huh. I always thought that, you ever hear the oath that the doctors take? Is it pronounced Hippocratic or hypocritic? Let's ask Dr. Fauci which one he took. By the way, has he been Clinton yet? I haven't heard much from the man who got paid $1 million a year to make sure you got $600 a week while you were not allowed to work. Anyway, getting back to the story. Apparently the flu is back. Check out this foolish statement by Dr. Scott Roberts, Associate Medical Director for Infection Prevention at the Yale School of Medicine. We've never seen a flu season in the U.S. extend into June. He actually believes that flu season ends before June? And there's no cases of the flu after June? He went on to scare the readers of CNBC article with this statement. COVID has clearly had a very big impact on that. Now that people have unmasked and places are opening up, we're seeing viruses behave in very odd ways that weren't before, he said. Doesn't he sound like he wants to be as famous as Fauci? Of course, now we have the dreaded monkeypox virus going around. I really think the world has gone bananas. Do you know that there are 2 variants now of monkeypox? Yep. The disease that you never even heard of before, because no one cares, or no one cared, I should say, now has 2 variants. Check it out. The World Health Organization noted earlier this week that the virus, whose symptoms include fever and skin lesions, may have been going undetected in society for months or even possibly a couple of years. By the way, so does my jock itch. Seriously, enough already. We've been locked down for 2 years or more, and with these ridiculous restrictions and mask mandates, and now we have to be bullied again by the mad scientists, as we in society are afraid to sneeze or cough. By the way, the article further explains that the real reason for the uptake in all this reporting, guess what? The real reason for the uptake in all this reporting is something they call surveillance bias, whereby individuals and medical professionals are more likely to report cases of diseases as they grow more in high profile. That suggests that some viruses, such as monkeypox, may appear to be growing when in fact they're previously just underreported. I want you all to get your gloves and your masks, put them on, and drive alone in your car and get tested for every one of the million possible viruses. Make sure you do this every day, or you might kill someone's grandma in California. All right, look, let's take a break here while I clean my hands and get some vitamin C. I'll see you guys in a minute.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock option sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on investor schooling, go to investorschooling.com or call 866-424-2829, 866-424-2829. Hey, I want to thank you all for listening on WWDB Radio 860 AM in Philadelphia. And of course, if you're watching online, please hit that share button. All right, everybody out there, hit the share button right now. Go to the share button, drop down, and share it in groups and share it on your page. Please do that. Hit the like button. Let me know you enjoy the show. And of course, you can also leave comments on Facebook, Twitter, LinkedIn, and YouTube. And I'll even say hi back. We got Rob out there and Bill out there. Thanks so much. And we got James out there. Rob liked my comment. He wanted to know, he liked the comment, has he been Clinton? He liked that comment. All right. All right, so far we've been just talking about the futures update. Right now, the futures are down 49. The S&P, a little, down a point, no big deal. And the NASDAQ is up 32 while we wait for the CPI data, because that's going to change the market. You just watch. Just take a look at the futures, and you don't even need to see the CPI data. You could just see the futures. They're either going to pop up or they're going to pop down. We talked about the flu being back because everybody's, not reporting COVID anymore. Coming up, we have inflation habits and Starbucks closing a Union store. And then, of course, we have today's picks and plays. But don't forget, hit that like button. Everybody out there, hit that like button right now. Hit that like button. Hit that share button. And don't forget to leave comments on Facebook, LinkedIn, Twitter, or YouTube. And if you're listening on WWDB Radio, be sure and set a preset to this station and listen every day at 7:30. Also, look up Money Chat Now on Facebook when you get home and let me know what you think of the show. Hey, by the way, did you guys order my new book yet? Come on, go there. Go to barnesandnoble.com. Order the book Money Hacks by Larry Steinhouse. And by the way, you can get it now on Kindle or Nook, but the physical book will be pre-ordered. You'll probably have it in about a month now, so it's actually going to be there pretty soon. And by the way, it's a great book. I got great reviews on it. All right, let's get into the second half. Let's talk about inflation habits. Look, as you know, inflation has run amok. Everything has gone up in price. Some inflation numbers you might not know. Beef is up 24%. Gas is up almost by 100%. Used cars and trucks are up almost 26%. Furniture is up at about 11%, and so on. Well, the people who are suffering from the effects of inflation, the people who voted for Biden? No, really, the ones who actually voted for him, some of them several times, but the people who voted for Biden are the people who are usually poorer citizens, and these are the people who are suffering the most, and they have to make some difficult choices. So these are some of the decisions and results of choices they are making. According to an article on CNBC showing an online survey, 52% of the people polled say that they're making less trips to the grocery store. 45% have switched to generic brands. 40% have said they're staying home for entertainment instead of going out. And 33% say they're buying in bulk. Another issue is the availability of certain foods. Even Linda, my wife, complains that it's difficult to find certain foods. Now, don't feel too sorry for us, but we did have to change from almond milk to coconut milk because we can't find almond milk anywhere. This article also quotes someone named Abby Looney. People always have the best names, right? Abby Looney, managing director at the Harris Poll, and she says initially concern was the highest around gas prices, followed by groceries and other forms of discretionary spending, but in the last couple of weeks, grocery stores have become the most concern for Americans. She also concluded in the article with this, right? Check it out. She concluded in the article this. There are some areas where Americans have not yet shifted their consumption habits, even amid high inflation. Spending on alcohol has remained constant so far, said Looney. People are still hanging in there. Hanging in there. Alcohol. I don't know. There's just so much. Make your own joke. Anyway, this says it all. People are still getting drunk, or maybe getting drunk more often in this economy. Obviously, the Pelosi's got to get drunk. By the way, here are a few things to think about from this article. If people are staying home more often, you might need to think about what they do when they stay home. One of these things is watch television. This might be a sign that the movie or streaming services could be a good one. I would also take a look at Netflix and Disney again at these low prices. Disney is at about $100 a share. It looks attractive. And it was about this range pre-scamdemic. And to me, that should keep the stock here for a little while. It also gives room to move up. Netflix, which is always overpriced to me, is about where it was pre-scamdemic as well. So this could inch up on the fact that people will renew their memberships or stay at home. And the lower prices, grocery stores like Aldi could be a play here, as well as dollar stores, and they're all going to be good plays into a recession and to recession fears. All right, let's. I would suggest you guys look at those stocks and see where they go. Okay, Starbucks. Let's talk about Starbucks. Hey, do you remember how proud the union thieves were when they helped a Starbucks store in Ithaca, New York, vote yes on going union? What a great day it was for them earlier this year. The employees were so happy that they can now try to bully the company they work for, Starbucks, into doing anything they wanted. Oh, happy day for the union suckers. And now they had to pay union dues and got nothing more out of the union. Typical. So check out what happened. In a typical restaurant like Starbucks, they have something called grease traps. You know, the area where employees pour the grease into and the trap keeps it from going into the waistline and clogging them. Look, if you've ever worked in fast food, and I did a really long time ago when I was a kid, you know that at the end of the night, you have to clean out these traps. It's really gross, but it's not really that difficult. Well, apparently the union boys in Starbucks either didn't clean them out well or something clogged them anyway. Normal people in a company would work together to try to solve this problem, maybe get a plumber, I don't know, or someone who could fix it. Well, the idiots in the so-called Starbucks union store decided to go on strike over the grease trap. No, really, on strike over a grease trap clog. Remember when unions were formed to make better working conditions for employees who were taken advantage of? Well, clearly a millennial who has lived in his or her mom's basement for their entire life and had their mom take care of everything couldn't possibly work in the terrible environment that had a clogged grease trap, so they went on strike. Starbucks decided to close the store, and wait for this. The reason they gave for it, you ready? The reason they gave for closing the store was a grease trap overflow problem. I almost busted out laughing when I read that. The employees went on strike over the grease trap overflow, and the company closed the store because of the grease trap. Well, of course, if you're a union mobster, you would be pissed off over this, right? So what do you think the union did? They filed a lawsuit, of course. The union committee alleges that Starbucks closed the store in retaliation to prevent workers from elsewhere from organizing. It's a clear attempt to scare workers across the country by retaliating against its own employees, the committee said in a statement. Of course, Starbucks responded with this statement. Starbucks opens and closes store as a regular part of operations. Our goal is to ensure every partner is supported in their individual situation, and we have immediate opportunities available in the market. So if you want to keep your job and, make some money to pay your bills, you might be able to go to work in a different, probably not union store. By the way, I wish all the union companies would have overflowing grease traps. This is hysterically ironic. Well, the union is asking the agency to seek a federal court injunction to quickly prevent or reverse the store closure. Reverse a store closure? Seriously? How do you go and make the government reopen a store? Unbelievable. Hey, barrister, I'll take a grande latte with a splash of "you're a dumbass for thinking you can't be replaced" with some sugar on it too, please. Hey, for all of you Starbucks fans, why don't you hold up signs at your favorite Starbucks location saying, "Please don't unionize. I want my store to stay open." All right, let's take a break here. When we come back, we'll be talking about some picks and plays for today. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is because everything you think you know about money is wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. By the way, you guys ordered my book yet? Order the book. What are you waiting for? And by the way, listen, you guys had a good time listening to that last segment. Did you guys share it and let all your friends be able to hear it? Come on now. All right, right now, the Dow is still down 57, 58. The S&P is down about 2, and the NASDAQ is up 30, which obviously means that we have not heard yet from the CPI data, because if it did, we'd be moving. We talked about the flu being back and why people are reporting things that aren't COVID now because they're not getting paid extra for it. We talked about inflation habits, and of course, we talked about Starbucks closing their union store. Make sure you petition your Starbucks to stay open. Did you guys hit that share button? Hit that share button. Hit that like button. Let everybody know what great stock picks are coming up. And of course, you could share on your page or in groups that you feel will benefit from the great stock plays. And you can also leave comments on Facebook, Twitter, LinkedIn, or YouTube. And of course, if you're listening on WWDB Radio, set one of your presets to this station and listen every day at 7:30 for all you need to know about the politics behind the stock market. All right, let's talk about today. As I said, it's all about the CPI data. We have to watch this carefully as the numbers need to be literally in the sweet spot, not too high and not too low. Look, it's always this way in the stock market. Weekends are always rough, but Fridays are great days to pick up bargains if you see any. If the data goes too high or too low, expect another 500-point down day. If it happens, honestly, if you get another 500-point down day, that's going to be a buying opportunity. So watch for it. It absolutely will be a buying opportunity because it won't go down much lower after that. If it's in the sweet spot, we may get a rally. Either way, next week we're going to start to see the market inching up as we get closer to earnings season. So the dead zone, for you guys who are students of mine and understand what the dead zone is, if not, you definitely want to find out more about that. The dead zone is ending, literally ends today. I have a few stocks that I've mentioned that should also do well into earnings. First of all, Meta and Apple will definitely do well. So these are going to be really good stocks into earnings. Doesn't mean they're going to do well at earnings. They're going to do well into earnings. Look, if you want to play on the safe side, I would pick dividend-paying stocks like AT&T or Procter & Gamble or something else that pays dividends and doesn't move much. Both of these two stocks are slow movers, which means they won't fall much, and they pay a good dividend, and you can sell covered calls against them. This is the place. Sell covered calls against stuff. The dividend-paying stocks may carry you nicely through the upcoming mess. Make sure you book a cruise on Carnival Cruise Lines so maybe I can recover some of my losses in this play. Man, did I ever make a bad play. This is really bad. And I got to tell you, the crazy part, at these numbers at 11-something a share, it's an awesome buy. Not the option, but the stock itself. They will definitely recover it. If you have the stock, you have all the time you need. The stock will be in the 30s again. It's not if, it's just when. All right, I'm holding both the options and the stock, and maybe we'll get lucky, and maybe somebody will come and buy them. All right, real quick, let's look at the futures real quick. We got the Dow is down 63, the S&P is down 2, and the NASDAQ is up 28. But I got to tell you, these numbers are all going to change in just a couple of minutes. All right, real quick, Bitcoin is struggling to stay above 30,000, and it isn't doing a great job. I believe 22,000 is the next stop before it gets really ugly. Ethereum is also holding at about 1750. That's not so great either. Ugh. All right, gold and silver. Once again, gold and silver aren't moving at all. And they're sitting there, 1850 and 22. It's almost like every day I read the same numbers. The Treasury bond, of course, is moving up, and they're above the 3% yield. It's going to get interesting today with the CPI report. Oil prices up to $22 a barrel, and of course the average gas price has moved up again to $4.99 a gallon. So let's all in unison say, let's go, Brandon. Hey, I want to thank you all for watching. I want to thank the listeners on WWDB Radio AM in Philadelphia. My name is Larry Steinhouse. I am the host of Money Chat Now, and I am the CEO of Investor Schooling. And by the way, you can contact me at contactlarry.com. You have to type it in. You got to contactlarry.com, and you can contact me anytime. I want you all guys to have a really great weekend and make it a profitable day.